Hello, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. I want to welcome everybody to the Daily FX walkthrough. Going to get started in just a moment. What I'm going to do tonight is walk through the latest technical report by Jamie Setley at DailyFX.com. So let's go ahead and pull up DailyFX.com, and usually the first thing I do when I get there is scroll down and click on Jamie's technical report. So let's see what he has to say. The euro-dollar is holding above short-term support line. Staying above there keeps the recovery scenario firmly on track. The decline from 148.71 is an impulse. Well, that means 5 waves. Expectations were that the ensuing advance would prove corrective, and it has. So that's how he feels specifically about the euro-dollar. But as we've been focusing on the dollar-yen in the past few reports, that's what I'm going to focus on again tonight. We can see briefly about the euro-dollar. This is the support line that he's using. Very simply, just connect those lows and see if prices can hold above there moving forward. So let's scroll down now to the dollar-yen. Dollar-yen has reached the 38.2, the most recent 5-wave drop, not shown as the break above a short-term trend line. This development suggests that a larger correction, perhaps to the 61.8, 103.1 at 103.44, is underway. So let's go ahead and pull up the charts. And if you recall yesterday, this is first the hourly chart of the dollar-yen. If you recall yesterday, we were calling for a short-term resistance at that 101 area. It kind of held. It wasn't very clean, obviously, as there were spikes above it. I believe that's about 30 or 40 pips above that 101 level. But Bollinger Bands did contain the price, and then we had the very sharp sell-off. So the 101 area in general did act as resistance, but again, it wasn't very clean. And as Jamie was mentioning that there could be a correction now up to the 103.44 area, if we zoom in a little closer here, we can see a very large wick to the downside. That usually does indicate reversals. Here, let me switch to the different style of chart so you can see that a little more clearly. We can see that very long wick down there. And again, that's something that I would look for tonight and into tomorrow. Possibly just having a slight bullish bias against the low of that candle, and the low on that candle is 97.89. So an entry somewhere near there with a stop back below the low of that candle wick, that could be a good short-term trade. But again, short-term trades, you have to be able to abandon your analysis right away. So let's go to the daily chart to see the bigger picture in terms of what Jamie is speaking about, and that's resistance near that 103.44 area. And here it is on the chart. That's the clear breakout level, also the Fibonacci level that Jamie was speaking about, and we can see that obviously that area acted as resistance the day after it was broken, and quite possibly moving forward, that's where this corrective rally could be headed. That could be the target, at which point we would look for short trades in the direction of the overall trend. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.